Hello everyone, welcome to another chapter of WD Gann trading techniques. Last time, in the last chapter that was there, we specifically saw about equinox and solstice. We come to know that there are two equinox, spring and autumnal, and second is again we have two kinds of solstice, which is a summer one and a winter one. And we also saw more of into details why this is formed and how this have been formed together, right? Second thing, apart from that, what we did is on the basis of these dates, we tried to do some back testing. So the back testing that was there, we did from 2015 onwards to 2020. That is, we had tried to cover probably two cycles or maybe one cycle because it was started from almost 2015. So 2015 to 2020 is one bull and a bear cycle which was there. Here we'll try to increase our sample size probably because we have considered last four bull and bear cycles. So we would be starting somewhere around just back of this. Probably try to consider this bear cycle also. A bear cycle is like if you see this as the 0 and this as 1 and coming back. So probably this should also be covered, but maybe we will try to go somewhere around back on this side and try to start somewhere around from 2003 onwards to just be on safer side so that we understand this upward cycle, downward cycle and cover one more bull and bear cycle rather. This is what we are trying to say. So this is what we had seen last time, starting from 2005 onwards to 2020-21. This is what was been covered. Here we now go back to 2003, right? So a lot and lots of back testing has been done. Probably if you see from 2003 onwards till the entire date, everything has been back tested, and probably we have a more significant database so that we can see whatever probabilities we are putting up from our side, how safe they are to test and what are the results altogether for those parts together, right? So here this is the first cycle, which is February 2003. So as per our key dates, the 8 key dates are for two solstice and two equinox. So these are the major dates. And apart from that, we have considered something at a 45-degree angle also, right? So this gives us this 4 dates plus 4 dates, that is 8 dates. So these 8 dates have been put up together. If you want to see how these dates have been analyzed or how things have been put up, please do go back to the previous video of WD Gann trading techniques, equinox and solstice. So you'll come to know about those parts, right? Now we start from 2003 onwards, right? So again, we do the same thing. And just to summarize on those bases, last times, the conclusion that we had drawn is only if we consider these 8 dates, we have an accuracy of somewhere around 48%. So 48% of the time, it generally comes down on the time frame which is been given, right? So highs or lows are mostly on those parts, right? And if we do some kind of approximation, something nearby, so our probability increases from 48% to 64%. That means from these 8 dates, somewhere around previously, we used to have only 4 dates, which were coming accurately either on the highs or the low. But if we do some approximation basically on those things, we get a probability which is higher and it comes down to almost 5. So 5 dates from these 8 dates come to almost an accurate point which is being given. So let's try to have this as an assumption or this as a conclusion, and let's try to test if we have the same kind of conclusion, right? So if we just check over here, probably the conclusion is more of on the same side. It is coming to more than 3, that is a probability of 42. Of course, we have to do some iterations over here so that we come to a more accurate point, right? And second is in terms of accuracy, again, it is coming to 58%. So this is again somewhere nearer to 64. We have to do some changes over here that I have not done or probably not kept it over here, but let's try to analyze one bull cycle, bear cycle. So we'll be covering somewhere around 2008, 2009 in this chapter and try to see something extra probably which we hadn't seen in the last chapter. So we would be covering something additional, which is in terms of Fibonacci, and try to see what are those exact points that we are getting. Are they related somewhere or not, right? So let's go back to the chart, right? So this was our first date. There was no high, no low as such. So that's why we have a yellow line, right? So this is nil. That is the first part. We go to the second date. I'll just probably correlate both the things together. so that we are able to get both the things, that is the date as well as for the year. So our next date is 21st of March. So this is our second date, 21st of March. If you see again, probably somewhere around, this was on a high side, right? So it came back, came down, and probably after that we had a low. So this I'm considering as a high. Why? Because we have got a double top over here, right? Signifying the market is going down. So again, if you see in terms of Fibonacci, yes, probably somewhere we are able to complete a cycle, right? So our next date after that is March. So we have seen this date. This was high, 21st of March, right? Then we come down to the next date, which is May. So 6th of May is our date, the next date which is there, right? We don't see anything specific on this date, but if we do some changes, that is approximation, we come to know that, okay, fine, 4 days back or 5 days back, there was a low. So again, this is an approximation. We have marked with a green color rather than a blue color. Right? We go to the next date. Next date is 22nd of June. So 22nd of June, again, we are not finding a low. Actually, this is the high which is there, but yes, after the high, there is no significant low as such. So that's why we haven't considered this. See, we just don't want to make down any false assumptions which are there. Until unless we see a clear cut high or a clear cut low, we won't be able to do anything. So this is a nil point that we have considered. Again, we go to the next date. Our next date is 8th of August. So this is 8th of August mentioned over here. So I just try to see probably on the basis of this gray color change which is there, right? So 8th of August, again, I don't find anything significant on this date, but yes, something which is very important for me is if I draw in terms of Fibonacci. See, this is the low of the Fibonacci, this is the high of the Fibonacci, and this is a reversal. So that's a reversal is coming to somewhere around 0.5 part, right? And probably this hasn't come down to 0.5 baht. It has just returned from 0.618. And in terms of Fibonacci, if we see anything as a retracement which is higher than 0.5, that is being considered as a high reversal. High reversal means it would be going to a higher levels, right? So what we see over from this point is this was the low, this was the high of the Fibonacci, that is level 1. We got a reversal which is above 0.5, and we got a quick reversal going up, and probably it went up to 2.648 before we got a major reversal, right? Now what is this X and XY swings? Probably you can just go on our unit of technical analysis Telegram channel, and there we have specified about this X and X swings. So this is small x and big X. So these are identical swings that we have seen in terms of points 1, 2, 3, 4, 5, 6, 7. The details have been given over there. Request you to go and check those things. Right. So we have considered this August date, 8th of August. And if we do some alterations or maybe approximation, we come to know that only, again, this is near the low part. So we have considered that as a low. And why this was a low is because this was a reversal point. Reversal coming to 0.618 part. So that we have ideally considered, right? After that, the market has started going up, and from there, again, we see a reversal. Now, again, if you see this reversal which is there, considering this as the 0 and this as the 1, yes, this has again come down to a part which is 0.648. So that's why the small x and large x points are been given, right? So again, this is nearer to the low. Approximation within 2 days is what we have been considered for accuracy purpose. So this has been considered as low, which is 23rd of September. So that day is again been considered as a low, right? After that, these dates which are there is 7th of November, right? So this is 7th of November. Again, this is a high. Why? Because if we consider this, this has been coming to a level which is, I'll just remove this so that, see, this has come down to an exact level of 1.618, right? So this critically is important. Why? Because maybe in terms of, we are thinking more of in two terms. One is price and second is time, right? These are the only two coordinates that we have. So on the vertical side, we have something called as price, and on the horizontal side, we have something called as time. So everything, whatever we have or data that we have is always in two coordinates. One is price and second is time. So in terms of price and time, if we see together, probably this is coming down to 1.618 level. Now coming to this parts, probably from our side, we can say that, okay, this is a probability that the points are reaching specifically on those locations on those dates. So this is an assumption that we have. And in science, there is something very important that, okay, every theory has got an assumption. So we work out on those assumptions and we see that, okay, if these assumptions that we have made are right or not. So if we have an assumption which is coming down as right, probably we say that the theorem or the theory which is there, that is right. Or if it is wrong, probably we go down to the some other assumptions and try to check out or validate those parts. So here we have an assumption that, okay, price and time. So if this is the time which is there and this is the price, probably this is something called as squaring of time and price, because it has been coming down to a level which is 1.618. Or second part is when we saw over here, this was coming to a specific level in terms of Fibonacci. Here also it was coming down to a specific level. So these are the theories that we have. We need to see, okay, if these theories are coming down as per the assumptions that we have or not, right? So here it was a reversal point. Here again, it was a reversal point. Here, probably it was coming at 1.618 in terms of Fibonacci, right? So that's why we are considered this as a high part. 7th of November. 7th of November, this is there. This is high, right? And we come to down to the next date, which is 22nd of December. See, 22nd of December again, which is there. This is not a high or a low, right? But what it tells me in terms of price and time is probably we have come down to a level which is 2, right? See, this may be a coincidence, but we are trying to see some theories and trying to coordinate those on the basis of two factors, which is time and price. So if this is the time, in terms of price, this is coming down to a level 2. This can be a coincidence, but probably we are just putting down those theory and try to see in different cycles whether we are trying to get so same time of repetitive factors or not, right? So in terms of price, yes. In terms of time, yes, this was the date which is there. In terms of price, yes, this has come down to a level of 2 in terms of Fibonacci, right? So if we see overall in terms of the entire year for 2003, we have got two accurate points. So we have put down these two over here, and we have got 1, 2, and 3. 3 is the approximate point that we have. So we mentioned 3 over there, and adding 2 and 3, it comes down to 5. So I'll just mark down a color that probably we have just gone through these things, right? So we go to the next year, which is 2004. 2004 has been marked in red. Why? Because this was a bear cycle. Let me just show it across to you in terms of both the Fibonacci's. So this is the Fibonacci which has been marked. It started somewhere around 2001. We got a reversal, and from here it went up, and the high was somewhere around in January 2004, and from there it came back to a level which is 0.382, right? So 2004 onwards to 2001 onwards to 2004, which is coming down to 3-4 years, we have considered this cycle because this was a reversal which was more than 0.5. So that's why we have considered this as a bear cycle. So we see these 5 months which are there together and try to analyze how things have been happening, right? So we come to 2004 and we come down to the low dates. So this was 22nd 12. We haven't considered this as a high or low, right? Then we come down to the next date, right? So this was a high probably, and this was a low. So that's why this has been marked in red. Why? Because we have got a double bottom over here. right? So this was the first date. This was the second date. Again, it has been coming to a low in terms of price factor. Yes, we have considered this one. Why? Because this was the first reversal that we got, and this is the second reversal that we got. We have always considered the bigger reversal. So again, it has come down to 0.236 level of the reversal together. Those Fibonacci levels have been marked on the left hand side, not on the right hand side. So please do consider that. So this was the high, this was the low, and this is the reversal that we got, right? So this reversal was exactly coming down to 0.236, which is in tandem with the unit of technical analysis theory that we have got. Anyone who is not aware about the unit of technical analysis theory, I'll request you to go to YouTube. If you type down unit of technical analysis and go on the channel, you'll be finding playlist. And this in this playlist, probably unit of technical analysis, this is there, and we have something called as WD Gann trading techniques, which we are currently going through. So here in chapter number 1, 2, and 3, probably we have considered bull and bear cycle, the bear cycle and the bull cycle. Let me just click across so that. So this is the first chapter, chapter 1, chapter 2, and chapter 3. So even if you go through this 3 chapters, you will be able to understand the basic things of unit of technical analysis theory. Right. So we saw January date, February date, I beg your pardon, and then we got 22nd of March. These two were lows again. All right. And after that, we have this next date, which is 6th of May. Yes. So this has been marked as low because we got a low. Second date was there. Again, this was a low. This has been considered as high. I'll tell you the reason why this has been considered as high. Right. So this was the low, this was the low, right? Next date, if we consider, I draw a Fibonacci, right? 0 to 1, we got a reversal as per the theory, right? And this part has come down exactly again to 0.5. So if you see this line, probably this is a 0.5 line. And this has been the last high of those parts. So significant again in terms of our theory that we are putting across more of for the Fibonacci. Yes, this has come down to 0.5 level. And that's why we think this is crucial. Why? Because we need to understand what the market is trying to say us. Now, if you see only WD Gann theories, which is talking about price or maybe about time factor, right? And if we combine that together with Fibonacci, we are probably able to get some better results, right? So here also we got something crucial. We got a high, which was again at the levels of 0.5 in terms of Fibonacci. So again, we are trying to see the same pattern which has been occurring, and we need to see this more of in terms of station, because here we are getting a direction, which is probably this was the last high, and after that it started coming down. So we can consider this price time factor as a coordinate, or maybe as a station, that okay, the bus has come down to this station now. From here, probably it should be going down or going up. The direction is totally different. But yes, probably these points are more of in terms of stations or locations that we are getting, right? So after this date of 6th of May, so we have come down to 6th of May, we have our next date, which is 22nd of June. Just before going to 22nd of June, one more thing is 17th of May 2004 was the low. So we saw a low which was there in May. So coming down to the exact date, this was the low date, and that's why this has been marked with a blue color rectangle, so that we are able to differentiate things which are there, right? So there was a low, there was a high, and again there was a reversal, right? And again, one more coordinate probably in terms of Fibonacci, if we see. Oh, I beg your pardon. Coordinates have been given on the left hand side. Sorry. Yes. right? So this was a zero, which has been marked over here. This was a high, right? So high, low, and after that we got a reversal. Now our date is 22nd of June, right? This just comes nearer to 0.5 level that we see, right? Maybe again a coincidence, but yes, in terms of price time factor, if we see and locate that on Fibonacci, this is again one more station that we got, which is again a reversal, giving us a direction of upward. We don't have a direction. We haven't got the direction till now. But yes, if you see in terms of coordinate or maybe in terms of station, this is coming down to 0.5, right? So probably the theory again, we are trying to repeat that in terms of coordinates for Fibonacci, right? Then we go to the next date. Again, if you go to this next date, which is 6th of August, 6th of August, probably 8th of August. I beg your pardon. 8th of August, probably we are not getting 8th, but the next date, which is 9th, that is there. Again, it comes down to a level which is what? Fibonacci level. Exact bang on that. So we again got one more station in that part, right? And again, we saw maybe some kind of congestion over here. That's why I would mark this with an arc. Probably 3-4 days, we are able to get some direction, or probably after that coming back to 0.76 level, and after that the market started moving up. But again, in terms of station price time, yes, we got some specific coordinates which are there. So that was this for 22nd of June. So this was 22nd. No, this was 22nd of June, and this high was there for 8th of August. I'll just go down to the next date, 8th of August. So this is 8th of August date, and we got a high over here. We go to the next date, which is 23rd of September. 23rd of September. Yes, this is again not a high or a low, right? We are not getting a high or a low over here. But if you see in terms of coordinates, yes, this is coming down to 1.272 level. This is 1.272 level, and yes, it is there. So again, probably we can consider this as a station in terms of price and time. Probably this has come down to this station, right? Again, it started moving up, coming down. Probably cycles have been created, and again it goes up, right? Again, for this next date, which is 8th of November, right? So we have considered nil over here. The next date, which is 7th of November. 7th of November is nil. But if you see in terms of price action or maybe in terms of station, yes, this has come down to 1.618. So previously it was at 1.272. Here it has come down to 1.618. This probably again can be coincidence, but yes, these are looking in terms of some stations that are there in terms of price and in terms of time. So we are probably getting more of stations. We are not getting directions over here, but yes, probably this was the previous station, this was the previous station, this was the previous station. This is come down to a new station now, which is acting in terms of Fibonacci, right? And probably that's why we are getting some kind of direction, maybe of low, then another low, higher low. This was probably a high. This was again a higher low, right? Something like that, which we need to see and adopt to those things, right? And then the last date of the year 2004, which is 22nd of December. So again, we come down to those dates of 22nd of December. Again, this is midway, not giving us any specific value in terms of Fibonacci or not, right? So we haven't marked anything, purely yellow. And we go to the next date also, which is 4th of February. Again, no specific value reference as such, neither in terms of time, price, or maybe Fibonacci. So we haven't marked anything, purely left it out as it is on yellow, right? So nothing like that. So we have seen 1, 2, 3, 4, 5 values which is there, and no approximation as such specifically. So again, accurate is again 5, approximate is again 5, right? And this was a bear cycle. So probably for bear cycle, if we see from the last cognizance also, it is like 1, 2, 3 points which were there, and here also 1, 2, 3, 4, 5. So for the last bull and bear cycle, it is not exactly the last one, but from the last chapter, which is there for 2005 and 2020. Probably we are getting a probability which is more than 4, or maybe the dates that we are getting is more accurate or approximate. Here we had a value of 1, 2, 3, 4, 5. Here we had a value of 1, 2, 3, 4, 5. And if we see again for this bear cycle, we had 1, 2, 3, 4, 5. So 5 dates are there. So average on, we can consider that for the bear cycle, probably this equinox solstice are much more probable dates. Let's try to see this for other dates also, and we will be able to have to a better conclusion or to a higher probability in terms of the bull and the bear cycle together, right? So we hop on to the next date, which is February 2005. We saw there was no relevance as such, specifically for that date. We come down to 21st of March. So 21st of March was not a high-low date, especially, but if you see more of as an approximation, this is nearer to the high date. So we have considered that's an high. That's why it has been marked in green. We come to the next date, which is 6th of May. 6th of May is again this date, right? So if we consider these two dates, this and this, if you are going back 1, 2, 3, 4, 5, 6, 7, 8, almost a week back, or maybe 10 days, considering a weekend, 10 days back over here, and again here 1, 2, 3, 4, 5. So if we go back, probably we are able to get the start and the end point also, right? This is what we had applied for other cycles too. We are considering that. So this is an approximation. This is not accurate, and that's why they have been marked in green. So this was green. This was green. We come to the next date, which is 22nd of June. 22nd of June. See, 22nd of June, if we see, this is more of what the trend line which has been followed. So there are higher highs, higher lows, higher high, higher lows, higher high, higher lows, which have been made. But we don't find any significant idea which is there that, okay, fine, this is a major low or a major high, which we are trying to find from our side. So I have marked this is yellow line, this is yellow line, this is yellow line, nothing more than that. So these 3 dates, 1, 2, 3, have been all marked as yellow. We go to the next date, which is 7th of November. So probably this is our date, 7th of November. Right, so this is 7th of November, again coming down to a low. How we found out this low is, if you see in terms of Fibonacci, yes, this was a high, this was a low, we got a reversal and it come down almost to 2.618. So this is a reversal which has been completed. And that's why we consider this as a low. Probably not this date, but 1, 2, 3, 4. Approximation has been done. Yes, we get a low. So that has been marked in green. And we come down to the last date of the year. This is 22nd of December. Right, so this is 22nd of December. Again, if we see in terms of the pattern, a trend line has been created. We have only considered the low, 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 low together. And again, higher high, higher low, higher high, higher low. So no significant major highs and major lows, right? But yes, that's how it is. So this has been marked as a yellow line, and this has been marked as low. Why? Because this is going up and down, up and down. So this is like a low. This was a major low, not a major low as such, especially. But after this, we didn't find any significant point which was coming as a low than that point. So this has been considered as low. After that, again, higher low, higher low. This was a low, again, higher low. See, if we consider this as a low, probably the low which was there is a higher low. So that's why this has been marked in red. No specific reason. Right, so low, low, low. Again, coming down a conclusion for 2005, we got 1, 2, 3. No accurate dates, but approximate dates were 3. So that's why we got a figure of 3. This is the start of the bull cycle, probably in terms of phase, which is there, right? We need to consider different phases also, like end of bull cycle, start of bear cycle, together for those parts, right? We are there in 2006. So 2006, this was a low which has been considered. This was a low because this is a higher low. This was a higher low. So that's why that has been considered. And we come to the next date. Next date is 6th of May. Let's see what happened on 6th of May. So this is 5th, this is 6th. 6th of May is coming within 2-3 days. So that's why we have considered this as a high. And this was a major high. While I considered this as a major high is 6th of May 2006, right? Now, if we see this in terms of the bigger cycle, right? This was a low. This is the low and start of the bull cycle. So end of the bear cycle was here, as we saw as per the previous Fibonacci, right? So we got a high, we got a low. From there, we got a high, and from there, a retracement which was nearer to 0.5, right? This was the next bull cycle starting from 2004 to 2008. We saw this in detail in bull and bear cycle. Unit of technical analysis 1 to 10. So you can just refer across to that. So this was the chapter 1 of the list of unit of technical analysis. Unit of technical analysis 1 to 10. Right? So this was 0 and this was 1, right? So if you see, yes, this point or maybe this of May 2006, this is coming down exactly to 0.5 point. And from that, we get a reversal. And this reversal has come down to 0.236 level. Now, one small point which I just wanted to explain over here. Again, if we see in terms of cycles or maybe the time period which is there, starting from this point to this point, we get somewhere around 24 bars, right? And again, if you see from this low part to this high part, this is again somewhere around 19 bars. So this is coming down approximately to a level which is there. And again, probably we'll see this in a different video together. But again, there are some repetitive cycles which have been formed, right? This is for the bigger cycles, but yes, these cycles are there which are being formed as cycles within the cycle. So we have bigger cycles, we have smaller cycles also. This probably we'll try to say or get relevance wherever required. I just wanted to show the relevance of these 2 months, that is May and June. So May was a significant high, and after that there was a low which was been formed, right? So we saw this date within the purview of high and lows. And we come down to the next date, which is June, 22nd of June. This was a low and approx low, right? So this was a low, but if we consider this within like 1, 2, 3, 4, 5, 6, 7 days, we are considering this as a low, right? Maybe here it was 4 days ahead and this was 5 days back. But yes, considering is as a significant low. Approximation one, not an accurate one. So that's why that was been marked in yellow, right? Next 3 dates, we'll go through that also. Again, a low, high, low, but not a significant way. We can still consider this. If you want, you can consider this in terms of probability that, yes, these are patterns which have been formed as lows, higher highs, higher lows, right? So I'll probably try to change that. Again, this is not being considered as a low. Why? Because after this, we had a major low, right? But yes, this date, probably we can consider this because after this low, we didn't find anything which is lower than that. So this is 8th of August. So probably the value of 1, 2, 3, 4, 5, this will be changing to 5. This should be going to 6 from that. right? Some examples I have left it as it is. Why? Because we can maybe probably on the basis of permutation combination change those, right? This is not being considered as a high. Why? Because after this probably this was a high which was there, after this probably this was a low which was there, so we can't consider that, right? So 1 2 days as it is, and 22nd of December again it has been considered as a low. Why? Because this was a low, and within a purview of few days this was there. That's why that's been considered as a low. I can consider this probably, or I can shift it to this date, and this date can be marked as yellow. So this is not accurate, but this is approximate. I'll change that in month of December 2006. Let's copy this from here, paste it. So here it goes to 4, and here it goes to 2, right? So just to summarize this, probably this was a low which we got in May, June. May was a high, June was a low, and this was a significant low in terms of bigger Fibonacci. Why? Because this has come down from 0.5 to 0.236 level. Just showing together things which are there on the bigger cycle and the smaller cycle also, so that it becomes easier for understanding. And also in terms of Fibonacci, yes, if we consider both the Fibonacci's together, one Fibonacci is considering this as a low, and second Fibonacci is considering this as the low. So we got a reversal, came down to 2 level, came back to 1.272 level. Again, from there it dropped down, and it came somewhere around to level 3. Here, if you consider the bigger Fibonacci over here, yes, it did come down to 0.5 levels, not exactly to 0.5, because on this probably it had a resistance at 1.272 level, and from there it dropped down, and this Fibonacci also it come down to 1.272 level, right? So different Fibonacci is again same kind of probabilities which have been coming down to. Let's go to the next year. We have already summarized 2006. 2006 was 4 accurate, 2 approx, which makes to a figure of 6. Let's go down to 2007. 2007. So 2007 was probably, this was a high date within 2-3 days, so that will be considered as high. This again was midway between high and low, and after this date again it was a high, so I haven't considered this as a major high or a major low. Why? Because this was midway, and you don't get any significant highs after that. Probably it can be considered as a low also or high also. So that's why benefit of doubt is always been given to a neutral part marked in yellow. Again, same over here, it is between high and low, so no significant high and low to be get. So that's why we're marking is neutral. Again, the third date, again neutral, no significant high or low as such specifically, because it has to come down to a lower part, but not considered, right? We don't have to go more of on a higher probability dates or something like that, where we don't have an idea. We'll just leave it across, right? Why I've considered this? Because after this low, we have this low, which is lower than that. If this low was probably somewhere around coming to this part, maybe we would have considered that. But after this low, we had one more significant low. So that's why this is not being considered. Just giving it for clarity purpose that we will fix of course the rules which are going to be same and adopted across throughout, right? So after that, we come down to a date which is 8th of August. Let us mark that. We see. So this is nil. This next date was nil. This third date of 22nd of June was also nil. We come down to this date of 8th of August. What is the relevance about 8th of August? Right. 8th of August was again a high. No, sorry. 24th of July. From that, we got a low, and this was a reversal. Now, again, talking about this reversal, this is coming down to 0.5 level, right? So something which we have seen previously coming down to a reversal, again giving us as a notation of 0.5 on the Fibonacci. So probably something is crucial about that, and probably we are not getting a high, but we are getting a lower high, right? So that makes more relevance to us if we consider this on the basis of Fibonacci. And this is what especially I wanted to show in terms of this video. That's why I made the second. And of course, for back testing, we have considered a different data, right? So that's why relevance of Fibonacci comes into picture, where we have not only the price factor, the time factor, but also considering Fibonacci, what are the levels. So again, we got some different station as per the date. That's why this has been considered as a high. And then next date is not making any relevance as such, but let's see. This is not coming anywhere. This is not coming anywhere, right? Midway between high and low. And this date is also not coming anywhere, midway, right? So this is not a significant high or a significant low. This can be considered as a low, but yes, this is just nearer to the high. So that's why this is not being considered as a major low. If this point was there, or probably this point was there, yes, I would have considered that, because we have a certain time period. This is there in October, and this is almost December, a significant time period, which is like 2 dates after that from this 1/8 date, because we have 8 dates, right? So no significance as such given to this part. This is December 2012. This is nil. So we have got only 2 dates. We have considered only 2 dates. The rest of the 8 dates are nil. So we get only 2 to summarize for 2007. Again, coming to 2008, we have considered there was a major crash. We went up to 0.236 levels. Right. So consider in terms of bull and bear cycle, yes, from 2008 onwards, it drastically came down. And this was a cycle which was there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. Right. Almost a bear cycle of 10 months. And after that, a consolidation of 1, 2, 3, 4, 5 months. So 10 months plus 5 months, approximately 15 months for the overall consolidation plus the bear cycle. Right. Let's go to our daily chart. And again, try to find out in terms of dates. Right. So this was the high, this was the low in terms of Fibonacci. This was the high, which was again coming to 0.5 levels. So we have considered this as a high. Again, for the same reason. This was a low because we got a double bottom over here. This was again a high because yes, this did come down almost to 0.5 level. And this was the high, last high. After that, the market has been coming down. So that's why these 3 points have been considered. So 2008 high, then a low, and then a high, right? 3 are there. The fourth date, which is 22nd of June. This has not been considered for the same reason. We had a low, and after that, we again had a low. So not much in terms of dates which are there. But if you see in terms of station, yes, this has come down to 1 level. So this was a station, this was a station, again, this was a station. Not in terms of high or low, but again, in talking in terms of station, yes, it was just nearer to 1 level, which you saw previously also, right? The next date, yes, again, this is a high because this was a major low. This was a high, and this after that high, we got a lower high. So this has been considered as a major part. Again, if we see in terms of station, yes, this is nearer to 1 level. So this was nearer to 1 level, this was nearer to 1 level, right? This was again a high because this was the previous high, this was the previous high, and after that, the low was a lower high, the major lows. So that's why those have been considered. Again, we go and adopt the same principles, not any different principles. In terms of station, yes, we didn't find any significant thing, but yes, this was again nearer to those stations only. So this station, this station, this station. Probably these are trying to say us something else. We need to consider that as a story because we don't get any specific direction, but we are finding that, okay, this stations, this point, this point, this point are again coming down to almost same kind of levels. and then probably moving down further. Not in terms of direction, but yes, probably that relative terms, again, somewhere nearer to those points only in terms of station. So August is there, November is there, and then we come down to this part. No, let's go to that point later on, but only cover these 2 points, August and September. So this is August, which was high. This was September, which was again a high. So in terms of cycle, we saw that, okay, this was an entire bull cycle. Sorry, I beg your pardon. This is a bear cycle, which has been completed. And after that, we saw a consolidation, which has been happening. There's already a cycle which has happened. So probably we can just consider that as it is, right? In terms of dates, yes, this was a high. Why? Because this has formed down a range. So we got a low, we got a high. So this high date which was there within purview of 2-3 days, that's why we are considered as a high. This date again a lower high. We didn't find a significant point which was higher than that. So that's why this has been considered as a high. So always the possibility again, if you see this point, this is coming down to 0.76 level. This is in terms of the station which is there. Maybe a station point. And after that, from here, probably you got a reversal which has come down. This point, see, this is again a station point, not in terms of direction, but was a high, low, sorry, then a high. We got a low, high, then a low. And this point is, again, we have our significant dates and again coming to 0.5. So this is probably the fourth point which we have coming down to a 0.5 level, occurring over a period of time, again and again and again. So probably this is telling us something more of as a station, not as a direction, but more of as a station, right? And if you see again, same kind of patterns which have been formed somewhere around at those levels one day. This was a level, probably this was again a level, this was again a level. The next point which has been coming, that is again a level. So not in terms of directions, but probably as we saw at the previous part, we had a level, we had a level, we had a level, right? So somewhere playing around nearer to one level and then probably taking a direction. Here again, probably this was a level, this was a level, this was a level, probably playing around with one level and probably after that taking a direction. So something probably we'll be able to figure out in the next chapters which are there, but yes, definitely trying to say us some kind of story, which probably we are not able to understand in terms of price, time, and again in terms of Fibonacci, right? So, but relevance wise, yes, this was a date. Let's see in terms of triangles. If we consider this as one date, this as one date, and probably this as one date. So this point is probably considering or seeing most of our dates together. Right. So this date was been, let me just bring it down. So this candle has been covered. This candle has been covered. This date's candle has been covered, and this date's candle has been covered. Right. So if we consider this, probably we are getting a pattern. We are covering a pattern which probably have to figure out what this pattern is, how it is there. But yes, same was there in the previous parts also. At these dates, covering this one, or this one. Probably you can just say right. So probably somewhere around a block which has been made. Not sure pretty how it is. But yes, again, more of consolidation or something like that, which has been shown through 3 dates, more of a consolidation which has been shown across to 1, 2, 3, 4 dates. I'm not sure. Just having a wild guess. Probably someone among who would be there who would be having a better idea about all these things, maybe coming back to me, telling this is what exactly this is in terms of maybe astrology, astronomy, or in other theories which are there. So let's keep this as a question mark at this part, try to identify things, maybe probably we'll be getting some different direction. So if we have something related to this, probably the box which has been marked, this again a box which has been marked. If you come down with some kind of theory from your side, do reply back in the comments or maybe on the Telegram channel, or you can personally get down to back to me on Telegram. You already have my address, details, coordinates, and I also put down into the description of this video. Right. So we are now covering 2008 last dates, probably December. So December, we saw this date was no. So this was December. This was 2009. Let's before that try to summarize 2008. 2008, we almost got 1, 2, 3, 4, 5, 6, 7, 7 high probability dates. Again, marked for those red lines. Red lines is the bear cycle. So bear cycle, probably we are able to get a high probability dates as per the previous data or maybe the previous charts that we have read for 2005, 2015, 2020, 2004, now 2008. It is more than 4. So that is more than the average value which is there. And it is coming down to 7. We haven't considered any approximation. So it again boils down to 7, right? Let's go to the next year, 2009. 2009, as we saw, this significant date station in terms of 0.5. Again, this was just moving about 0.5, probably giving us a direction that, okay, I'm going up. Right? This date, this line which has been marked is the 0.5 line, and above that it goes up, right? And let me just come down to one more approximation in terms of right. So the next date after that is coming down to May, 6th of May. Now this date probably has been just above this 0.1.272 level. Again, maybe probably a higher probability, which is there, but yes, probably giving us some kind of directions. Yes, I'm going higher or something like that. Right. So we saw first date of February, then we saw it of 21st of March, and we also saw it for May. So this was there for May. Nothing specific in terms of high-low points or which are there, but yes, if you see, these are making us stations. This was a station, this was a station, again, this was a station, right? So we go to the next date, which is 22nd of June. 22nd of June, again, it was a nil date. 28th of August and 23rd of September is again a nil date. Let's try to check that. So this was nil. Again, this was a low because it was midway. Like, okay, should we consider it as a high or low? Nothing like that. So this has been kept as a question mark. Again, over here, a low and a high, which is there again. So that's why I just kept as a question mark. Simple as that. Left it across. Not considered as a major high and low. Again, over here, because we had a high which was there after that. So not considered. This point is November 2009 because it comes to a low. After that, there was no significant low. If we consider, yes. So this low was probably low, and this was a higher low, this was a higher low. So that's why it has been considered. And then we had December, right? December again, probably we had a low after that. So I'll just mark this as yellow. So this should be coming on the 1, right? So here we are trying to consider more of 2003, 2004, 2005, 6, 7, 8, considering one entire bull cycle and two bear cycles, which are there. Probably we'll keep this date for the next video, because again, these are like 1, 2, 3, 4, 5, 6 years. Where we have considered 1, 2, 3, 4, 5, 6 years. So half of that has been considered, half of this. Again, to summarize for the same things together, here we are getting some high probability dates which are there for the bear cycle, as per what we have seen till now. Right here also it indicates the same kind, but let's see. We don't play across with any of the things. Last time our probability was somewhere around 48%. Here it is coming down to 41%. And with the accurate points, approximate points, it comes down to 58, which is almost similar to 64. Higher than 50 is anything good. Right? So next time we'll probably, for the Equinox and Solstice chapter, which is there, we'll come down with a chapter which is there for 2009 to 2014 onwards. Okay, see you. Thank you so much. Bye. Take care.